A quick mention regarding underwriting. These are both very simple underwriting processes. There's no blood, there's no medical exam. It's all based upon forms and telephone interviews. Genworth can get an answer back usually within 48 hours, and State Life actually within 30 minutes. State Life is fantastic in the sense that you can sit down with a client, you can fill out the form, you can fax it over to our office, and we can get an underwriter on the phone asking the appropriate questions within about 15 minutes and a decision within 30 minutes after that. So you can literally have the client in the office and be done with the entire process before they leave. So that is one advantage to the State Life product over the Genworth product. So that's the annuity side. I do want to mention before I go on to the life insurance side about 1035 exchanges. This is a huge opportunity. What you can do is take an annuity, an existing annuity, beyond the surrender period, and even if it has huge taxable gains within the annuity, let's say it's been around for quite a while, they can 1035 exchange it over to one of these annuities, and the money will still come out tax-free for long-term care purposes. Doesn't matter what the source is. It can come from an older annuity policy, but as long as it comes out within the qualified, meaning per the Pension Act, long-term care annuity, the benefits will be paid on a tax-free basis. So look for 1035 exchanges. We're seeing a lot of sales in this particular area. There's a lot of older annuities out there. And for folks that are concerned about long-term care, again, being able to take the money out on a long-term care basis is key, even more important than the interest rate. You cannot replace the tax savings there. It would be huge, and a lot of your folks might be interested in doing something like that. Let's move on to the life insurance side. I'm not going to be quite as extensive in the analysis here because the products are actually quite similar in a lot of ways. So I'll go over a couple of the differences and then just show you the numbers. I'm not going to spend quite as much time in detail on each particular product. Again, these are the 6 different products that we have available. We're not going to look at all of them. We're going to look at these 4. Genworth PLC, John Hancock Life Care, Lincoln Money Guard, and State Life, which is called Asset Care with State Life. So they're all single premium policies. Genworth and Lincoln are in the UL chassis. The John Hancock and State Life are based upon whole life policies. Issue ages relatively, the same in the same ballpark. Going up to age 75 with Hancock and 80 with Money Guard and Asset Care. The minimum issue about the same across the board. The death benefits are 25 to 50,000. State Life is based upon a $10,000 premium. There is a huge difference though in the maximum issue. You can see with the State Life product, they'll actually issue up to a $1.5 million death benefit with their policy, which is much more than the other products will. The long-term care waiting period, 90 days for the Genworth, John Hancock, and Lincoln. 60 days on the State Life. That's one of their traits. They have shorter elimination types of periods. John Hancock does not offer an inflation option. However, the other products do offer if you want an inflation option so that the amount of the long-term care benefit increases to try to keep up with the cost of inflation. And, of course, there is a charge for that. Genworth, Lincoln, State Life all have a return of premium rider. What that means is your clients can take their money out of the policy at any time and get back at least the amount that they put in. You put in $100,000 today, they decide a year from now they don't want to do this anymore, they can get the $100,000 out with Genworth, Lincoln, and State Life. Not true with John Hancock, although the surrender charge goes away after, I believe, a couple of years. But by and large, these products all kind of work the same way. So let's take a look, and I'm just going to look at a 50-year-old. For this particular example. And again, this is based upon a $100,000 single premium. Now, it used to be that Money Guard was really the only game in town here. And that's changed quite a bit now. They definitely have some competition. It's a good product, but it might be a little bit outdated when we start comparing it to some of the other products that are available. Money Guard being in the 3rd column here. If we look at the death benefits, we can see that the Genworth death benefit is $326,000. Remember, these are life insurance policies with long-term care benefits. And that $326,000, based upon the scenarios that we selected, will generate a $650,000 total possible long-term care benefit. The maximum monthly benefit would be $13,624. If you compare this to every other option, it seems like the Genworth PLC is by far the best option available. But there is a kicker. What their policy says is that as soon as there's not enough cash value in the policy to pay for the long-term care charges, the amount of the benefits drop to the guaranteed benefits available in the policy. And I think it happens in the 21st year, but you can see in year 30, the benefit for the death benefit side drops from $326,000 to $222,000. The long-term care benefits drop in terms of the maximum amount available and, of course, the maximum monthly available as well. So, and this is, again, on a 50-year-old. It might not be the same on a 70-year-old. We'd have to take a look, but it's important to keep in mind. The other carriers do not have that type of I'm going to call it a feature, not necessarily in a positive sense, but they don't have that in their policy. It's more consistent in terms of the benefits that are available. Lincoln MoneyGuard has a $306,000 death benefit to start out, higher than all but that Genworth policy. However, their death benefit declines, and that's kind of they've been doing this for a while. That's how their policy has been structured. That's not the same as with the John Hancock and the State Life policy. So sure, if the person died early on, they would have a larger death benefit with the Lincoln MoneyGuard policy. But if we realistically look at life expectancies, MoneyGuard is just not really the policy that it used to be. There's some better policies, in my opinion, that are out there today. The death benefit, when most likely needed, will be less than that which is available with the other policies other than with the Genworth policy, as well as the maximum monthly long-term care benefit. Same $100,000 buys less long-term care benefit with MoneyGuard than it does with either the John Hancock policy or the State Life policy. So in my opinion, the John Hancock Life Care and the State Life Asset Care are the two policies, at least with this 50-year-old scenario, that really look like they are the best that are available right now. The death benefit on the State Life policy, a little bit more than John Hancock. The total long-term care benefits with State Life, a little bit more because they actually pay a benefit for 50 months during the scenario that we created versus 48 months with John Hancock. But, by and large, I think these are pretty comparable policies. And you may have a lot of folks that really like the John Hancock name, obviously big, very well-known insurance company. So, just like with a life insurance policy, a traditional policy, sometimes we'll pay a little bit more premium to go with a better named company, a larger company, a stronger company than we would with maybe one that's a little bit less well-known, less stable. But I do want to emphasize that State Life is an excellent company that we've done a lot of business with, and their financial ratings are very strong. They're just not as well-known as John Hancock, but they're a very strong insurance company. So, again, they're very similar. I would really focus on John Hancock and State Life if I was looking at this for a 50-year-old. Kind of the conclusions that I came with here, again, Genworth offers higher initial benefits, but lower benefits when they're most likely needed. The MoneyGuard policy is really not up to speed, in my opinion, at this point. John Hancock has a great policy, consistent benefits throughout the life. They don't have some of the bells and whistles that the others do and that State Life does. For instance, they don't have that return to premium option. They don't have the inflation option, but it's still a very good option to consider. And the State Life policy certainly is an excellent one. We've worked with State Life quite a bit, as well as John Hancock and the others. They also have a nice little feature in that they've got 4 different asset care policies available, one for non-qualified money, but they also have options available if you've got folks with IRAs that combine a life insurance policy with a separate annuity, which also has some long-term care benefits. So they've really kind of gone the extra mile in trying to think of the source of the money and how they can design policies to really max out the benefits available for your clients. They also offer, in addition to a single premium option, you can pay for the policy on an annual basis, and they also have a 10-pay and a 20-pay scenario. But again, John Hancock, fantastic. I would definitely focus on the two of those. Genworth might come back in the mix when we're dealing with a slightly older person. I didn't run that scenario for this presentation. But when you have a scenario and you have a client that you want us to illustrate, we'll certainly take a look at Genworth as well to see if perhaps they're a good fit with that group. Before I wrap up, I do want to talk very briefly about a new service that we have created called the Integrated Advisor Solution. I'm not going to talk in detail about this, but just to say this. There are a lot of ideas that are out there, and we share a lot of ideas with our clients, but it's one thing to know an idea, it's another thing to actually put it in place. So we created the Integrated Advisor Solution to do exactly that. What we do is work with our advisors now to really help implement the ideas that we're sharing with them. And just very briefly, for this particular example, what we could do is simply create a landing page for your website. If you don't have a website, not a problem, we can host it for you. This is just an example on term insurance, but we could do one on these long-term care benefits so that you can point your clients and prospects to a page on your website to see if they're interested in the idea. We also now have a full email marketing system in place. So that we can actually manage some email marketing campaigns. And basically the end goal is to get your clients to raise their hand and say, yes, I'm interested, and you can focus your time spent working with those that are interested and not have to maybe waste your time on people who really are not interested or not right for this particular product. We can help put all this stuff together. There is a slight charge for this because we're charged for the service as well, but it's very minimal and the benefits can be huge. And most importantly, we'll help structure everything so you get the benefit of our knowledge and experience in terms of crafting the emails and crafting the landing pages and putting this all in place. If you're interested in that, contact Nicole Leist in our office. Her contact information is up there right now. Nicole at Provada.com, and she's at extension 115. She can walk you through this, and she can answer any questions on these products as well as myself. So that's pretty much it. That's everything regarding the presentation today, but I'll open it up for any questions that people have. Okay, I'm reading one question. Total living care is available in all states other than Washington, Mass, and Pennsylvania. It definitely is available in California. So these are underwritten contracts, and the underwriting is certainly a lot less than with traditional long-term care. Unfortunately, they do look at some disqualifying conditions. Recent cancer history, Parkinson's would absolutely be a disqualifying condition. They do have to generally be in reasonably good health. I have done some of the state life policies with people who are much older that do have some physical issues, and they have very liberal underwriting for the base policy, but there are definitely some disqualifying conditions. If people need assistance walking right now, essentially what they're looking for is, are they going to need this long-term care benefit imminently? And if the answer is yes, then they're not going to be able to qualify. But I've seen a lot of folks who, for instance, with state life got approved and with MoneyGuard were declined. So there are certainly some better options with people that have some minor issues. However, anything as serious as Parkinson's, unfortunately, would not be able to qualify for any of these. If you have any other questions, please give me a call. I'm at extension 111 or Lloyd at Provada.com, LLOYD. Or like I said, you can get in touch with Nicole. Either of us can help you or anybody else here in our office. We appreciate your time. We appreciate your interest in Provada. We think this is a fantastic product. We're doing a lot of sales with these products right now. Like I said, #1 sales idea from the NAIFA convention, I think mostly because folks out there are not aware of these particular products. They're not aware of the benefits of the Pension Protection Act. I'm talking about not just the clients, but financial advisors as well. So we really encourage you, give us a call, work with us. We'll create a marketing plan for you specifically to really reach out to your clients and prospects so that you can generate some good sales for yourself, and obviously importantly solve some real problems for your clients that they might not be aware of, and even if they're aware of, might not know that there's some great products out there that can solve these issues, whereas maybe in the past they weren't available for them. So thank you for your time, and we will have another webinar next week. We'll be announcing that shortly on a different topic. Thank you.